The JSE advanced for the second day today in line with major peers. Investors closely watch the earnings season and more economic data while also digesting hawkish comments from Fed officials. Independent analyst Mbuso Zulu joins us for an overview of the latest market moves. Thank you very much, ma'am, for your time this afternoon. Let's start with how the markets are faring so far today and what is driving those moves.
Good afternoon, Duduzile. The markets are slightly up today. You are seeing broad-based buying and no particular thing really shooting the lights out. And I would say it is just a little bit of market confidence coming back on. The markets have been shaken over the past days, and you've seen a risk-off sentiment as a result of the action happening in the Middle East, as well as just a higher for longer rates view that is going to prevail across central bankers. You're seeing a reluctance to cut interest rates in a hurry, so markets just have been digesting that over the past couple of days, but some optimism is coming back into the markets, and that's what we're seeing.
All right, all eyes will be on the interest rates decision next week. Your thoughts on how the committee may vote this time around?
Yes, I think just in line with other central bankers and especially emerging markets central banks, we have a weakening currency and we still have inflation that is just a touch below the higher end of the band. And comments from the central bank governor earlier this week have come out and have been a bit hawkish, stating that yes, inflation is in line, but it's not really where they would want it to be for them to be comfortable with starting to cut interest rates. So I expect that they will hold interest rates at this meeting that they will have. And I think as well for the first half of the year, you are unlikely to see the central bank starting to cut interest rates. That is more likely in the second half of the year as inflation comes in a little bit lower. So that's when we can expect interest rate cuts.
Okay. Fruit exports via the Cape Town port have plummeted this season due to continuing problems at the harbour. What's driving the declines?
Well, agriculture contributes about 2.5% to SA GDP. The Cape Town port in particular exports 35% of the country's agricultural products. With Transnet and the various issues that they've had over the past couple of years, that is resulting in a lower exports in this season, this harvest season, which runs from November to May. You've had heavy rains as well that have also impacted, but you've had breakdowns and you've had equipment that was supposed to be delivered by December that hasn't really arrived. It was going to alleviate some of the pressure that Transnet and the port was experiencing. So this is a bit disappointing when you consider that produce growth of 21% was expected for this year, which would have been very profitable for farmers and would have been good for the country's GDP contribution. But now you're seeing exports being lower in the region of 20% lower, 30% lower for some produce categories compared to the prior season. This is also negative for the investment view or for our country's view just as an export hub. We export predominantly to the UK and Europe. And so if you're unreliable and cannot deliver on time, then it does produce risk for those customers. And so some of them may start thinking about making alternative arrangements of where they will be sourcing.
Mm-hmm. Troubled Afristat Investment has admitted it is unable to continue as a going concern, and placing the group under business rescue is not possible. What's going on there?
Yeah, in order for the business to be placed under business rescue, there must be a reasonable prospect that the company will be able to operate as a going concern. So you've seen that the company has had the FSCA license withdrawn. And this is just because of the concerns that the FSCA had around practices, especially selling and marketing what they view as high risk, the 2.3 billion preference shares that they had issued to the market. These were seen as high-risk instruments, especially in light of the fact that most of the investor base consists of retail investors who are also pensioners. And so that, in addition with the fact that the company is highly leveraged, the current asset to current liabilities, that ratio, you're seeing them being over-leveraged, where the liabilities in particular are much more than the assets. And so the business being in an over-leveraged position, non-profitable position, and not being able to enact a turnaround plan has resulted in them reaching this decision that they can no longer continue as a going concern.
Okay. U.S. department store chain Macy's is cutting 2,350 jobs and closing 5 stores. What's going on?
This is about 3% or 3.5% of the store base that they have. Macy's is a department store, and over the past number of years, we've seen department stores coming under pressure just as a result of the structural change in consumers' shopping patterns. You have more online and a greater move towards convenience, whereas people in the past years used to go to malls, and the department stores did serve a compelling and convenient offering back then. However, now with the advent of online, especially with Shein and other pure play online players, department stores don't serve that need that consumers did have. Therefore, the company is relooking their strategy. They are going to be opening more smaller stores in more strip malls and provide that convenience in that way. Also then just relooking at the number of laborers that they have. So some of the job cuts will be at head office level as well as then within the store and operations area. It's also the second restructuring that the company is going to be embarking on in 5 years. The last one was just before the COVID pandemic, just before 2020. And they have, over the past, addressed the number of underperforming stores, but it is an ongoing process, and we can take it as just a move on their part to streamline their store base and provide more compelling convenience for customers.
Mazulu, thank you very much for your time this afternoon. Mbuso Zulu is an independent analyst.